Welcome to the Standard Deviations podcast, brought to you by Orion Advisor Solutions and hosted by Dr. Daniel Crosby, Orion's Chief Behavioral Officer and New York Times bestselling author. This year, Dr. Crosby embarks on a compelling exploration of meaning, what it is, why it matters, and how you can create more of it in your life. Each episode will only be available for 1 week, so don't miss your chance to listen. Tune in regularly and join the journey.
The Case for Calm, Being Still in a Turning World. Rudyard Kipling's If offers a blueprint for calm and character in the face of chaos. In the poem, a father imparts to his son a quiet, powerful lesson. If you can keep your head when all about you are losing theirs, yours is the earth and everything that's in it. Published in 1910, the work was partly inspired by the real-life trial of Leander Starr Jameson, a man who led a doomed raid in South Africa and faced public humiliation with stoic grace. Kipling saw in Jameson a rare quiet dignity, the ability to remain composed amid turmoil. The poem's protagonist didn't let chaos wreck his character, a hallmark of maturity. It turns out the same can be said for our investing. Markets, like life, are prone to unpredictable swings. A dramatic headline stirs panic, markets wobble, and animal spirits quickly turn from greed to fear. Yet research suggests that the most successful investors aren't those who react the fastest to the news cycle. Instead, those who take the time to process their emotions, think critically, and act with discipline tend to fare best. According to a study from The Emotion of Money by Robert C. Quinn, individuals with high emotional intelligence, those skilled at perceiving and managing their emotions, consistently earned higher returns than their peers. By keeping their impulses in check, they built thoughtfully constructed portfolios and resisted the urge to overtrade. This emotional clarity led to financial gains, especially during market volatility. Conversely, the study's participants scoring low on emotional intelligence were triggered by raw perceptions of risk, which resulted in subpar returns. The research is interesting and encouraging in that most people can increase their capacity to manage their feelings. Emotional intelligence isn't about suppressing innate inclinations, but channeling them. Viewed through that lens, we can craft a playbook for practicing patience when market volatility arises. Kipling's If You Can Meet with Triumph and Disaster and Treat Those Two Impostors Just the Same isn't a call to numbness. It's a challenge to rise above the fray. So how do we as investors embody this calm? Here are practical steps for being still in a turning world. First, review your plan with your advisor. Remind yourself why you decided on a strategy. In calmer times, you constructed a plan rooted in long-term goals and values, not today's headlines or what the financial media heated. I promise there was a reason, and a quick refresher can re-anchor you to that logic. This exercise will feel like a lifeline when the storm hits. Second, sleep on it. Institute a 24 or 48 or 72-hour delay before making any non-routine investment moves. Research from the Journal of Economic Psychology shows that time-buffered decisions reduce impulsivity and increase long-term alignment. In this case, a parent or trusted friend's advice to sleep on it is correct. A pause isn't indecision. It's discipline. Third, anchor to non-financial metrics. Choose a calming, stabilizing behavior to command your attention. Steps walked, hours slept, time spent with loved ones, and track that. When markets devolve into a frenzy, these controllable habits keep your focus on what you can control. It's a subtle rewiring that supports emotional regulation and calm. Fourth, and finally, turn off real-time alerts. For goodness sake, disable those push notifications that bombard you with the latest financial news. News feeds, particularly about your money, expose you to all that's uncontrollable, which breeds anxiety, not the stillness that we're talking about here. Media thrives on urgency, but constant updates only serve to spike your cortisol levels and shrink your perspective, often at the expense of sound long-term judgment. Literally silence the noise. The bottom line, Kipling's poem finishes with a promise: hold steady and the world is yours. With investing, the aim isn't so much about scoring wealth amid market madness, but just keeping peace of mind. The emotionally intelligent behavioral investor controls their thoughts and actions amid macroeconomic chaos. They know the truest words in investing are "this too shall pass," and that all these headlines will soon be forgotten. By reviewing your plan, pausing before deciding, focusing on all that's not financial, and tuning out the clamor, you can bask in this bastion of stillness. I hope that you are keeping well in the midst of what has been an emotional and tumultuous couple of weeks in financial markets. If you're looking for more resources like the piece that I shared with you today, I'd encourage you to go to orion.com/market-volatility, orion.com/market-volatility. We have a ton of resources there, many of them authored by me, that will help you or your clients make it through whatever this period ends up looking like unscathed. So we appreciate you tuning in and hope that you'll be back soon, and hope that you'll check out the microsite. Thanks for tuning in. We'll see you next week.
Thanks for tuning in to Standard Deviations. If you can't wait till next week for more behavioral finance insights, visit www.orion.com. All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by Orion and its affiliates, subsidiaries, and employees. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information the participants consider reliable.